Hello students, welcome to all of you Shiksha 360, and today basically we have to discuss LRAB chapter number 55, that is definition and features of a company. So let's start our discussion on these things one by one. So section 3 of the Companies Act 1956 defines section 3 of the Companies Act 1956 basically. This section, this section, that is section 3, please remember that. Which section defines regarding the company, that is section 3, clear? Section 3 of the Companies Act 1956 defines that defines a company as a company formed and registered under this act. Clear? Basically, this act defines clear basically whether this company is formed or registered under this act, or the company is already existing. Clear? Or the company is already existing. Clear? Already existing basically means that this act is to be defined in the or basically enacted in the year 1956. Clear? And there are also some companies basically that are enacted in the 1913, 1920, or even before that. Clear? So that companies are registered basically in the previous Companies Act. Clear? So they have to registered under this again. Clear? So an existing company. Clear? So what is an existing company? An existing company basically means a company formed and registered under any of the former Companies Act. Clear? What is the meaning of an existing company? Basically, an existing company basically means a company formed and registered basically under any of the existing former Companies Act. Clear? Any of the former Companies Act. Clear? Because there are different Companies Act. Clear? As per the time passes, there are different Companies Act. Some are repealed and some are new are enacted. Clear? So all these things basically they are trying to say here. Clear? So please remember that basically section 3, specifically this section tells that clear, regarding the existing of the company. Clear? Regarding the existing of the company. Now move to the next point. What are the features of a company? Very, very important. This is basically 1 or 2 marks question basically for the examination point of view. Clear? Regarding what are the features of a company. Clear? First one is the registration. Clear? Registration is to be must. Clear? So a company has to be compulsory registered basically under the Companies Act 1956. Clear? That is the registration. A company has to be compulsory registered basically under the Companies Act 1956. Now next one is the artificial legal person. Clear? Because company, it is not a natural person. Clear? It is not a natural person. Clear? Basically, it is an artificial legal person. Clear? How it becomes legal? After the registration, basically, a company becomes a legal person. Clear? So, artificial legal person. Clear? A company, it is a basically artificial legal person which is created by law. Clear? A company, basically, it is an artificial legal person which is created by law and can be dissolved by the law alone. Clear? Basically, a company, it is an artificial legal person which is created by law and can be dissolved by the law alone. It is invisible. Clear? Basically, this company, basically, it is invisible, intangible, and exists only in the eyes of the law. Clear? A company, it is an artificial legal person basically which is created by law and can be dissolved by the law alone. Clear? So it is invisible, intangible, and exists only in the eyes of the law. Clear? Basically, and exists only basically in the eyes of the law. Clear? And it enjoys, clear, many rights of a natural person. Clear? Basically, it enjoys basically many rights of a natural person. What are the rights basically which they enjoy? Basically, I will tell you now. Clear? So first of all, basically, you will remember that basically it is an artificial legal person that is created by the law and can be dissolved by the law alone. Clear? And can be dissolved by the law alone. Basically, the company, basically, it is invisible, intangible, and exists only in the eyes of the law. Clear? Basically, and exists only in the eyes of the law. Clear? So now what are the rights of a natural person? Clear? First one is a company basically may enter into contracts. Clear? Basically, company, basically, they may enter into contracts basically under the name, like we can say that basically Reliance is doing any contract with any other company. Clear? So here the name of the company basically will come out. Clear? Not any other person. Clear? As a company may enter into contracts basically in its own name, and it can acquire and dispose property. Clear? A company may enter into contracts basically in its own name, and it can acquire and dispose property and can be fined under the provisions of the law. Clear? And can be fined. Clear? Basically, if they will do any wrong, so basically they will also fine. Clear? Basically, under the provision of the law, basically for the violation of the law. Clear? For violation of the law. Clear? However, a company, it is not a natural citizen. Clear? However, a company, basically, it is not a natural citizen like an individual. And courts have held that neither the provision of the Constitution of India nor the provision of the Citizenship Act basically apply to a company. Clear? It means that basically company, it is not a natural citizen. Clear? Basically, it is an artificial entity and it does not have any citizenship like the individual have. Clear? So thus, even though a company has a nationality and domicile, it has no citizenship. Clear? Basically, their nationality. How we can identify the nationality of any company? Basically, in which country basically it is to be registered, that is the nationality. Clear? Basically, like we can say that basically if any company is registered in India, so that company it is known as the Indian company. Clear? It means that basically that company has the nationality, but they have, we cannot say that basically that has the Indian citizenship. Clear? But we cannot say that that has the Indian citizenship. Clear? So this one is the registration, this one is the artificial legal person. Clear? Now third one, independent corporate personality. Clear? Basically independent corporate personality. Clear? So a partnership firm. Clear? Basically a partnership firm basically has no legal existence apart from its member. Clear? Basically a partnership firm basically has no legal existence basically apart from its members. Clear? In other words, we can say that a partnership firm is nothing but the aggregate of the partners. Clear? In other words, basically, or in simple language, we can say that basically a partnership firm, it is nothing but the aggregate of the partners. Clear? Basically, but the aggregate of the partners. Clear? Now, this is the partnership firm. Clear? That is basically has not any legal existence. Clear? Now, on the other side, basically a company basically on the other side or other hand, after incorporation, it is in a law as a single person. Clear? Clear? On the other hand, basically, a company basically on the other hand, after incorporation, that is basically means after registration, is in a law as a single person. Clear? It has a distinct legal personality. Clear? Because it has a registered under the act. Clear? By incorporation, basically under the Companies Act 1956, the company is vested with the corporate personality which is independent of and different from the members who compose it. Clear? And different from the members, like basically in the partnership firm, which we have already discussed in now. Clear? Basically under that, the partners are responsible for all that. Clear? Here, all the responsibility basically it is on the company, not on the members. Clear? Not on the members. Here, basically the company is wholly responsible for all these things. Clear? Company is responsible basically for all these things, not as the member. That is basically independent corporate personality. Clear? So we have discussed three things. First one is the registration. Second one is the artificial legal person. Third one is the independent corporate personality. Fourth one is the limited liability. Clear? Now fourth one here, that is the limited liability. Clear? Like we know that basically in the partnership firm, all the liability basically it depends on the partners of the firm. Clear? Basically here, there is a limited liability. Clear? What is the meaning of that? Let's discuss. Clear? So limitation of liability, basically it is an advantage of the incorporation of a company. Clear? Limitation of liability, basically it is an advantage of incorporation of a company. Clear? Since the company is basically under law, since under company law, the existence of a company basically is different from its members and directors. Clear? Since under company law, basically the existence of a company basically is different from its own members and directors, and the company lets to its own business existence. Clear? Since under company law, basically the existence of a company is different from its own members and directors, and the company basically lets its own business existence. And since it is itself the owner of its asset and its liability. Clear? Because the company, it is the owner. Clear? Basically the company, it is the owner basically of its assets and liabilities, basically all the things basically, like we can see that basically if you want to purchase any land, so you can purchase on the name of the company. Clear? If you want to do any contact, you can also do basically the contact on the name of the company. Clear? Since under company law, the existence of a company basically it is different from its own members and directors, and the company basically lets its own business existence. Clear? And since it is itself the owner of its asset and its own liabilities, the members of the company are not bound to contribute anything more than the nominal value of the shares held by them. Clear? They have not to contribute anything, like basically in the partnership firm, basically if any specific partner basically do any fraud, clear, in the name of the firm. Clear? So basically all other partners are liable for that. Clear? In this way, basically there is not anything in the company. Clear? So basically up to how much basically they can, the members of the company basically are not liable to basically contribute anything more than the nominal value of the shares, clear, held by them, and their liability ends. Clear? Basically, and their liability ends there. Even though there may be creditors, clear, and their liability basically ends there. Even though there may be creditors who may be claiming crores of rupees basically from the company. Clear? Basically, creditors basically who may be claiming basically crores of rupees basically from the company. That is basically that person who have purchased the share of that company. Clear? Who have purchased the shares of that company. Clear? because there may be creditors, clear, because they are purchasing the shares of the company and they already give amount to the company, clear. Only after that basically they are able to purchase the shares, clear. Only after that basically they are able to purchase the shares of the company, clear. So please remember all these things. On the other hand, basically in a partnership firm, clear, basically on the other hand, in a partnership firm, the liability of the partners basically for the debts of the firm is unlimited, clear. In the partnership firm, basically the liability of the partners for the debt of the firm basically it is unlimited, and the partners are required to meet all the liabilities of the partnership firm basically from their own pockets, clear. And they have to meet all the liabilities, clear, and they have to meet basically all the liabilities of the partnership firm basically from their own pockets, clear, from their own pockets, clear. So these are the some important things which we have to remember. This is the fourth property, that is the limited liability. Now next one is the perpetual succession, very very important, clear. Like you know that basically like in any business, like basically I will first of all I will explain that after that I will tell you one example, clear, so that you are able to remember or understand this thing, clear. So an incorporated company that never dies, clear. Like you will find that basically the founder of the company later on basically gives the management, clear, to any specific person, that is basically we can say that basically CEO, clear, chief executing officer, clear, or MD, managing director, clear. So if that managing director dies, basically it does not mean that the company basically now fails, clear. They will give the responsibility to any other person, clear. They will give the responsibility to any other person, clear. Like we will take any public sector bank example. Okay, so basically the MDs of these public sector banks, clear. Basically, we can say that generally they have the tenure of 3 years, clear. They have all the complete responsibility, clear. All basically they are constituted by the government of India. So overall, basically main responsibility is the government of India, clear. Basically they have basically appointed MD or chief executing officer, clear. Basically from time to time as per the requirement, clear. So basically that is basically they are saying that basically an incorporated company basically never dies. It is a legal entity, clear. Basically it is a legal entity basically with a perpetual succession. So the insolvency or death of member, clear, the insolvency or basically death of member does not affect the continued existence of the company, clear. The insolvency basically or death of member basically does not affect the continued existence of the company, clear. In spite of total change in the members of the company, clear, in spite of total change in the members of the company will remain the same entity, clear. Even like we can say that basically the total management of the company will change, even if that the company will remain the same, clear. So basically members may come and members may go, but the company goes on forever, clear. Basically some members will join, some members will leave, but the company remains forever, clear. So that is the important thing, that is the perpetual succession. Like we can say that basically in the partnership firm, if one of the partner dies, clear, basically, and if they have not specific mentioned in an agreement, so the partnership firm can be dissolved now, clear. So in that case basically the partnership firm can be dissolved, clear. So these are the important things basically which we have to remember. Now move to the next one, that is separate property, clear. Now next one, that is the separate property, clear. So on incorporation, the company may becomes the owner of its capital and assets, clear. Basically on incorporation, basically the company becomes the owner of its capital and assets, and the company is capable basically of holding the property basically in its own name, clear. Separate property basically on incorporation, clear. Basically on registration, basically the company becomes the owner of its capital and assets, clear. And the company is capable basically of holding the property basically in its own name, clear. The company is capable basically of holding the property basically in its own name, clear. That is the separate property, clear. So these are the things: perpetual succession, separate property. Now move to the next one, transfer of shares, clear. Basically transfer of shares, clear. Basically this is also mentioned under the Companies Act 1956, clear. So the Companies Act 1956 basically state that the shares or other interest of any member in a company shall be movable property, clear. Basically shall be movable property, clear. Transferable in the manner basically provided by the articles of association, clear. Basically we have to discuss in the upcoming slides basically what is the article of association and memorandum of association, clear. Clear. So basically we have to discuss regarding all these things, clear. Basically what is the articles of association and memorandum of association, clear. Very very important for the examination point of view, and we have to also understand, clear, what is the basic difference between them basically when we are opening any account, clear. So basically we have to take which thing and what is the what is to be mentioned under that, clear. So the Company Acts basically 1956 basically state that the shares or other interest of any member in a company shall be the movable property. Clear? Transferable basically in the manner provided by the articles of the association. Clear? A shareholder basically, like you are purchasing any shares of any company. Clear? A shareholder basically may sell his shares basically in the open market and get back his money basically without changing the capital of the company. Clear? Without changing the capital of the company. Clear? Because some are purchasing the shares, some are selling the shares. Clear? So this process is continuously to be going on. Clear? So this process is continuously going to be going on. Clear? That is the transfer of shares. Clear? That is basically the transfer of the shares. Clear? So these are some of the important features. First one is the registration. Second one is the artificial legal person. Third one is the independent corporate personality. Fourth one is the limited liability. Fifth one is the perpetual succession. Sixth one is the separate property. Seventh one is the transfer of share. Next one, that is the common sale. Clear? That is basically if any person is basically, like we can say that if your branch manager signs on any official letter. Clear? Signs on any official letter, like we can say that this is a Rohan. Clear? So what they will do basically after signing, clear, basically they will put the stamp. Clear? Basically they will put the stamp, like basically on that, basically like we can say that manager SBI area or location. Clear? Or branch code. Clear? So all these things are mentioned. Clear? So basically they are signing this letter basically as authority given by the bank. Clear? Basically as authority given by the bank. Clear? That is the common sale. Clear? So as a company, basically it is an artificial legal person. Clear? Basically company will not sign. Basically the persons. Clear? It is not capable of signing documents basically for itself. Clear? So it acts through the natural persons. Clear? Basically it acts through the natural persons who are the directors basically appointed by the shareholders of the company. Clear? So as a company, basically it is an artificial legal person. It is not capable of signing documents basically for itself. Clear? So it acts through the natural persons. Clear? Basically it acts through the natural person who are the directors basically appointed by the shareholders of the company. Clear? Who are the directors basically appointed by the shareholders of that company. Clear? However, since it is a legal person, clear? Company basically it is a legal person, not a natural person. Clear? It can be held responsible basically for only those documents basically that bear its signature. Clear? That bear its signature. Clear? So how the company signature is to be made by a common seal, that is the stamp. Clear? So hence the law basically provides for a common seal with the name of the company engraved on it as a substitute basically for its signature. Clear? So hence the law basically provides for a common seal basically with the name of the company basically engraved on it basically as a substitute basically for its signature. Clear? So any document basically bearing the common seal of the company is legally binding on the company. Clear? So basically on any document, clear, basically where the common seal of the company is mentioned along with the sign. So basically that is legally binding on the company. Clear? That document. Clear? However, common seal basically cannot be affixed by any director. Clear? It has to be affixed in the manner stated in the articles of association. Clear? That is basically we can say that basically if any document is to be signed. Clear? So in the article of the association, basically they have mentioned that basically 2 directors or 3 directors are to be present at that time. Clear? 2 directors or 3 directors basically are to be present at that time. Clear? So basically they have to take care regarding all these things. Clear? While executing any document. That is the thing basically they are saying here. Clear? So, however, common seal basically cannot be fixed by any director. It has to be fixed basically in the manner stated in the articles of the association, that is in the presence of 2 directors who shall sign on the document basically where the common seal is fixed in their presence. Clear? Basically where the common seal basically it is fixed basically in their presence. Clear? So this is the meaning of the common seal. Now move to the next one. Now till now basically we have discussed the features of the company. Clear? Now discuss what are the distinct, basically what is the difference between a company and a partnership. Basically from here, basically from the second point directly, basically you will get basically 2 questions. Clear? 1 or 2 questions directly basically you will get basically from the second point. Clear? So let's start discussion one by one. Clear? Distinction between a company and a partnership. First one is the registration. So registration of a company basically it is compulsory registered basically under the Companies Act 1956. Clear? So a company basically it is to be compulsory registered basically under the Companies Act 1956. Clear? On the other hand, for the partnership form, it is not compulsory to be registered. Clear? But if a registration is to be done, clear, registration of a partnership, it is not compulsory under the Partnership Act 1932. Clear? Basically there is not any compulsion to be registered registration. But if they have to be registered, so they have to be registered basically under the Partnership Act 1932. Clear. Next one is the number of members or partners. Clear. Next point, that is the number of members or partners. Clear. So very, very important. First of all, I will write here, that is private company. Second one, public company. This is the important, very, very important question. So in the private company, so minimum, maximum. So minimum of 2. Here, this is minimum of 2 and maximum of 50, basically in a private company. And in the case of public company, minimum here is 7 and maximum no limit. So please remember these things. Clear? Basically minimum of 2 and maximum of 50 basically in case of a private company, and minimum of 7 and no limit basically on maximum number of members in case of a public company. Clear? Basically in case of a public company. Clear? So please remember all these things. That is the number of members or partners, minimum of 2 and maximum of 50 basically in case of a private company, and minimum of 7 and no limit on maximum number of members basically in case of a public company. Clear? Next one is minimum number of 2 persons is required to basically to form a partnership. Clear? Minimum number of 2 persons basically is required to form a partnership, and the maximum number is 10 for the banking business and 20 for any other business. Clear? So these are the different important questions, basically 1 mark question for the examination point of view. Clear? So please remember all this thing. That is minimum of 2 and maximum 50 members basically in a private firm, and in a public minimum 7 and maximum no limit. And there are minimum number of 2 persons basically to form a partnership, and maximum number is 10 for the banking business and 20 for any other business. Clear? And 20 for any other business. Clear? So please remember all these things while answering the question. Clear? Now move to the next one here. Legal status. Clear? Now next one, that is the legal status. Clear? A company has a legal existence. Clear? Basically a company has a legal existence basically separate from its own members. Clear? A company has a legal existence basically separate from its own members, and it is viewed as a separate legal person. Clear? And a company basically it is viewed as a separate legal person basically from its members. Clear? And it is viewed as a separate legal person basically from its member. Clear? On the other side, basically a firm does not have any separate legal existence basically from its own partners. Clear? So a company has a separate legal existence basically. On the other side, firm does not any special separate legal existence. Clear? Basically they have to exist basically on the behalf of its member. Clear? Next one is the ownership of the property. Clear? Ownership of the property. Clear? So the property of the company basically it is owned by the company itself. Clear? And not its members. Clear? The property of the company basically it is owned by the company itself and not its member. Clear? As the company has a separate legal existence. Clear? As the company has a separate legal existence. Clear? So the property of the firm on the other side, basically the property of the firm basically it is owned by the partner themselves and not by the firm, as a firm does not have any separate legal existence basically different from its partner. Clear? Different from its partner. Clear? That is next one, that is management. Clear? So the company is managed by a board of directors. Clear? Elected by the shareholders. On the other side, basically a partnership firm basically it is managed by the partners except to the dormant and sleeping partners. Clear? Except to the dormant and sleeping partners. Clear? So dormant or sleeping partners basically are those partners basically who have put their capital. Clear? Basically who are put their capital in the partnership firm, but they are not doing any work. Clear? Basically, but they are not doing any work. Clear? So basically they are providing only monetary help to the firm. Clear? But they are not doing any work on that. Clear? That is basically we can say that partners. Clear? That is a partnership is managed by the partners basically except the dormant or sleeping partners. Clear? Next one is the perpetual existence. Clear? Company is to be existed. A company has a perpetual existence. Clear? On the other side, a firm does not have any perpetual existence. Clear? A company has a perpetual existence, that is continuously existing. Clear? That is continuously existing. On the other side, basically a partnership firm basically does not have any perpetual existence. Clear? Now next one is contract. Clear? A member of the company basically can contract with the company. Clear? On the other side, a partner cannot contract with the partnership firm. Clear? A member of the company basically will contract with the company. Clear? Because company is a separate legal entity. Clear? On the other side, a partner basically cannot contract with the partnership firm. Clear? Because the partnership firm basically it is formed by the partners. Clear? And they are liable for that. Clear? Next one is the liability. Clear? Except in the case of a company basically with unlimited liability. Clear? We have to discuss in the next session regarding the types of the company. Clear? Regarding the types of the company. Clear? So except in the case of a company basically with unlimited liability, the liability of the members of the company basically is limited. Clear? The liability of the members of the company is limited, and the liability of partners basically in a partnership firm is unlimited. Clear? So in the company basically the liability of the partner members of the company is limited, and on the other side, the liability of partners in a partnership firm, it is unlimited. Clear? Next one is the transfer. A transferee of shares basically in a company becomes a member of the company. Clear? And the consent of all members is not required to become a member. Clear? On the other side, basically a person can become a partner in a partnership firm basically with the consent of all the partners. Clear? Basically with the consent of all the partners. Clear? So these are some of the important things. Clear? That is the perpetual existence, contract, liability, and transfer. Clear? So a transfer of shares basically in a company becomes a member of the company. Clear? And the consent of all members is not required to become a member. Clear? On the other side, basically in the partnership firm, basically the consent of all the partners is to be required to become a partner in a partnership firm. Clear? Last 2 points, death and agency. Clear? Very, very important. So the death of any or all the members of the company basically does not determine the end of the existence of the company. Clear? The death of any or all the members of the company basically does not determine the end or exist and does not determine the existence of any company. Clear? It does not any impact. Clear? If any one person or all the person of the company dies. Clear? Because other persons are to be appointed as per the time passes. Clear? So death of a partner basically dissolve the partnership firm. Clear? On the other side, basically death of a partner basically dissolve the partnership unless the partnership deed provides otherwise. Clear? Unless the partnership deed basically provides otherwise. Clear? Sometimes basically it is mentioned in the partnership deed basically even in the event of the death of any person, the partnership firm basically will not dissolve. Clear? That is the separate thing. Clear? Generally, basically it is to be dissolved. Clear? So that is the death. Agency. The members of the company basically are not the agents of each other. Clear? Or of the company. Clear? Basically the agency basically very, very important. This is basically 0.5 mark question. Whether the members of the company basically are agents of the company or not? No. Clear? Basically the members of the company basically are not the agent of each other or not of the company. Clear? On the other side, basically every partner of a partnership firm. Clear? Basically it is an agent of the other. Clear? On the other side, basically every partner of a partnership firm basically it is an agent of the other. Clear? So these are the some difference basically between the partnership firm and the company. Clear? So these are some of the important differences basically between the partnership firm and the company. Clear? So please remember all these things. Clear? So in the next session, we have to discuss the different types of a company. So hope all of you are able to understand all these points. Very, very important. Clear? This point, it is very, very important. And you will find that either in the PPP or in the LRB, basically you will get definitely question from that. From this paragraph. Okay. So thanks to all of you for attending this session. Hope all of you are able to understand all these points. So thanks to all of you for attending this session, and I request to all of you, please share, please join our YouTube channel basically for all updates, that is Shiksha 360. And for JIB basically all updates, join our Telegram group JAB Exam 360. And thanks to all of you for joining this session. For any update, you can mail on our email ID shikshaofficial360@gmail.com.